Welcome back to Liberty and Finance. We're always delighted to have this widely popular returning guest and widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. We're joining him by audio only tonight because he was at a big event with Robert Kiyosaki in Miami, and he's going to be en route, but able to join us via audio only. So we still are able to get your questions answered tonight. And so if you're on YouTube, if you want to participate in the live chat, if you want to ask questions of Andy live tonight, and tonight is Wednesday, November 13th, 2024. Make sure that you're signed on to our YouTube Liberty and Finance channel. Make sure you're subscribed. You got to click the subscribe button so you can participate in the live chat. And I see we've already got a whole bunch of people there in the live chat, some familiar names and some new ones as well. Thanks everyone for being here, and feel free to type your questions for Andy. I see some of them are already accumulating in there. I'll get those in front of him. I wanted to kick us off tonight with a question that was raised by Rafi Farber, our correspondent in Israel, who has been watching the bond market closely, watching the equity markets, and watching the metals markets and the geopolitical situation. And he's right in the middle of the thick of one of the hottest spots in the world right now, geopolitically. But he wrote a provocatively titled article this morning saying, "Is this the last day before the bonds blow up?" And the reason he was asking that was because the consumer price index number that came out today was at the estimated 2.6% for the core and 3.3% for the including fuel and food and so on, and wondering if this is going to drive the Fed to have to cut rates more, and if that's going to spook the markets internationally, in the bond market specifically, as far as loss of confidence in the bond stability. We've already seen a very volatile 10-year bond. And so that's where we're going to start tonight, but we're going to get to your questions as well. And Andy, if you're there by audio, I'm going to
Yeah, I'm
share.
here.
Okay, great. Welcome, welcome. And I'm going to share a image of both of us that everybody is probably very familiar with, so that they have something to go with the audio tonight, and we won't be just without that. And let me do that right now. And otherwise, your thoughts on Rafi Farber's proposition about whether we are at a crisis point right now with bond yields seeming to be breaking out of the Fed's control, and partially perhaps driven by loss of confidence in the U.S. bond as a safe haven by foreign holders.
100% done again. 100%. I mean, the Fed is trapped. And you can notice that, or you can see that by their efforts to lower rates 70 basis points or 75 basis points. They have lowered them uh, over the last month and a half or so. And the yield on the 10-year and the 30-year have risen commensurate, if not more, with what they've dropped on the front end. This is the bond market's way of saying that that's a no-go. And as we continue, as all politicians have done in the past, to favor inflation over austerity, this will be a larger and larger problem. You had Trump call the Fed boneheads in his last tenure as president for not lowering rates to zero. In fact, I think he'd prefer negative yielding rates, and that's the problem, is that we are a country that is awash in debt, and at some point, when you talk about favoring inflation over normalizing your balance sheet, over making the tough decisions, the rest of the world, who has been the financiers of our exorbitant lifestyle, began to question the wisdom of holding treasuries of any duration when inflation will erode the value. And that anyone who pays attention knows that the numbers by which they cite inflation, including the CPI, is just that. It's a lie. And they exclude so many things, and they change so many metrics to fit their inflationary agenda, that at some point the realization creeps in, and I think we're right there now, that what do you do? Do you favor your economy, or do you favor your currency? And when we talk about de-dollarization around the globe, it's less what currency people are trading in, and more, what are they doing with their savings? Used to go into treasuries. Not the case anymore because of these factors. Because last year was the first year in 45 years that the 10-year treasury had greater volatility than the price of gold. And so look, I would simply say to you this, that this is a problem that's only going to get worse. It's only going to get worse, and we haven't even begun to see how this all plays out yet, as rates will on the long end of the bond continue to move higher and higher and higher.
We have a specific question here from Mankaran Atwal, who is looking at forms of metals that people may want to hold as insurance against the volatility of the system, including the bond market, the stock market, and the banks. And that is, should he swap gold Costco Buffalo rounds in for Eagles or pre-33? So I guess that your big view of the importance of owning U.S. minted legal tender coins versus straight up bullion, given different scenarios that in the environment that you find us in right now.
I think that my mentor Richard Russell always used to say, in the end, you'll be defined by the number of ounces that you own. And certainly we will witness he would witness a major reduction in ounces if he made that trade. But there is something to be said for owning legal tender coins in an environment where we already have 11 states with 21 more in front of their legislature debating or contemplating using legal tender coins like the Eagle as legal tender for all debts, public and private. I mean, I guess I would have to know a little bit more, but in general, if I had my druthers, I would own nothing but American-made coins. But if it were a situation where he had a couple hundred ounces to his name, or even 1,000 ounces to his name, and that represented a very large portion of his asset base, then switching it to American Eagles, losing in that transaction 10-15% of the silver, is something you need to think about strongly. Perhaps the best way to move forward would be to favor buying Eagles on subsequent purchases. So look, silver is silver, but there is something to be said in this environment, one where I think you will see an awakening by the public. And those people in the states that have already recognized legal tender coins like the Eagle as currency, perhaps will wake up to this reality and say, geez, maybe we need to buy some Eagles. The mint has been the model of inefficiency for the past 4 years. And so I would simply say that if I had my druthers, everything would be in silver Eagles or silver Morgan dollars or junk silver, because the American-made coins, I think, will carry a much higher level of demand when the public jumps on. And I'm convinced, Dunnigan, and maybe I've been very early, but I am convinced that the American public will jump on. I do believe we're nowhere near out of the banking problems, especially as the 10-year yield rises higher and higher and higher. That's the preferred vehicle for the banks to hold. And so, yeah, as their balance sheet gets worse, as more and more banks start to expose the over-leveraged position they have and the undercapitalized position they have, like the Bank of Lindsay, Oklahoma, although that was more fraud, but yet severely undercapitalized in regards or in relation to their liabilities. All it takes is one large bank to fail, and to be bailed in the way that the Bank of Lindsay, Oklahoma was, where half of the uninsured deposits are gone, vaporized. And if that happens on a larger scale, people will wake up in a panic. And I think the realization that metals are a place to go in that environment, an asset that has no counterparty liability that you can hold yourself, that's when I think we see a real demand push into American-made products, similar to what we saw during the pandemic, where junk silver carried double-digit $10, $11, $12 premiums, silver Eagles 13, 14, 15, Morgans out of sight. That I see happening again, just under different circumstances.
We have just a couple of weeks since the election here, a lot of questions coming from people about the reasons behind the gold and silver pullback that we've seen over the past week in particular,
Yep.
and following the election. Some people asking, is it mainly because the loss of uncertainty. So now there's less uncertainty than there was. So there was a fear trade that now people are feeling a little bit more confident coming out of moving metals, money out of metals. Others are wondering about cryptos. Taking the brunt of people's investments as they've been performing better than gold and silver for the past week or two. Your thoughts on the big reasons behind the current pullback that we're seeing in metals, and then secondly, I guess we can just put that in perspective, just for everyone, that gold, started out the last 12-month period at like 1975, and here we are at 2600. Silver started out, like 20 in the low 20s. Here we are at 30 plus. So both of them are up significantly more than 30% over the past 12 months. So even though people are describing this as, they've taken a dump or they've taken a dive or they're crashing or whatever, if you look at it from even the last 12-month period, it tells a different story. But your personal view of the drivers behind the current pullback that's persisting in both gold and silver, and whether you think it presents an opportunity or whether you think it's likely to persist on a prolonged basis, et cetera, and if so, why?
Yeah, I mean, yes to all of that in the respect that everything that you said is true to a degree. I mean, look, we have just come out of bizarro world. Let's just call it what it is. And I think so many people feel refreshed and vindicated and excited, and rightfully so. It's been 4 years of absolute insanity on so many levels, socially, morally, economically, financially, where all of the things that I have said over and over and over and over again on your show about the the border, the immigration, the judicial system, the electoral process, the lawlessness, the valuing lifestyle over merit, all of these crazy things that are contrary to our culture, that have been whitewashed over the last 4 years. You can see that President-elect Trump is doing all he can in a very expedient manner, if you will, to address these things. And I give him credit for that. And we should be optimistic for that. Part of the pullback in metals is irrational exuberance. And while it's fair to be happy and exhibit exuberance, much of the behavior is irrational in the respect that financially nothing's changed. The banks are still massively over-leveraged and undercapitalized. And President Trump's agenda will be one of a weaker currency, a loss of purchasing power, and lower interest rates. And this is massively inflationary. And so while he will hopefully get us back on track as a nation and going back to the things that have inspired admiration around the globe forever about this country that we have deviated so far from, it's that type of mentality that has thrown out the baby with the bathwater, that has moved from risk off to risk on. And there's something to say about that too. I mean, you could argue that this Trump trade, if you will, cryptos and stocks and things that the 1%ers own, will do very well. But in the end, the inflation that is baked into the cake, the fragility of the banking system that is baked into the cake, and the need to reset this system has not changed. The drive of the BRICS after what the Bank of International Settlements did to them at the 12th hour, which, as we talked about last week, is akin to espionage. It's right out of a James Bond movie. Their impetus for de-dollarization and accumulating commodities has not changed. And so while we should be optimistic, while we should be thankful, while we should be grateful that President Trump will address the ills that have afflicted this country from a social standpoint, from a moral standpoint, from an immigration standpoint, from all of the things that have, I think, troubled most people. And I don't care what side of the aisle you're on. Many of these things, I think, have troubled even moderate Democrats. And we're not talking the far, far left. But this is something where I think going back to our roots, our culture, is the first place to start. Now, as far as fixing the ills of our economy, of our massive massive debt, the path that he's taken isn't really the best way to go. Lowering interest rates in order to have a strong currency and a strong economy, let me rephrase that. In order to have a strong economy, you have to have a strong currency. In order to have a strong currency, you have to have interest rates high enough to support the currency. And he's moving in the other direction. He wants a weak currency. He wants low interest rates. Now, this will be very great for the stock market, for the crypto market. This will be great for people who own assets. But in the end, the inflation, and like the first question, who wants to hold our treasuries if we are lowering interest rates, pivoting and giving into inflation when we're 65% away from the target rate, using a metric that understates inflation? The sophisticated investors around the globe understand this. So in essence, this is why you see the long end or the back end of the yield curve, the 10-year and the 30, moving higher. So in the end, this signals much higher inflation. This signals a gift, if you will, in precious metals. But this is not something to fret about. Look, the commercial banks, I've talked about it forever. Think about just silver for a moment. In the United States, 8 commercial banks held 800 million ounces short in silver, between 7 and 800 million. That's a whole year's worth of global mine supply. And basically, those same banks are short on London on the LBMA to the tune of 4 to 6 billion ounces. They're short massive amounts in gold, and they've been getting drubbed. And I was wondering for a very long time how they would get out of this position. Well, now we see it. They've used this exuberance, this irrational exuberance, as a way to start to square their balance sheet, to cover their short positions. And I assure you that when we look at the next Commitment of Traders report that will come out on Friday, we will see an awful lot of managed money selling and commercial bank buying and commercial bank covering. Ultimately, that's very, very bullish. If you take a step back and think about it for a moment, this should have been expected. And I think it's something to not be afraid about, something to understand, and something to realize that ultimately there is no path, none, to what President Trump is trying to do or any of the issues surrounding our economy that don't center around inflation. If not, if they choose austerity, then welcome to the greatest depression ever. And so this is the path that all elected officials choose. That is a much easier path, and that is inflation over austerity. So, yeah, precious metals, this pullback, I guarantee you that the BRICS countries, Russia and China and India and Saudi Arabia and all of these countries, they're not upset about this pullback. I think they're using it as a subsidy to continue to accumulate in an environment that ultimately will be defined by massive inflation and lower interest rates, which ought to ultimately move towards higher interest rates on the back end of the curve, because no one in their right mind will buy and hold our treasuries of any duration, which I think are uninvestable right now, unless the rates go higher because of this inflation, because of the history of weaponization, and because of the default risk. All of these things, the long-term investor is thinking. The front end of the curve, the short-term rates, that's a whole different story. And one other thing I'd like to mention, for the talking heads who say, well, rising rates on the 10-year is very bearish for gold, I say BS to that. Gold has gone up month after month after month after month after month with rising yields on short-term treasuries, which are far more attractive in my mind than on a 10-year treasury. I would much rather own a 6-month treasury paying 5% than a 10-year treasury paying 4.8%. I don't care how high those rates go until they get much, much, much higher. Then we can talk about those rates affecting the desirability of holding gold. But at this level, no, that's not the case. This is just commercial banks cleaning up their balance sheets and the managed money chasing a higher yield in the risk on trade in stocks and cryptos. But it doesn't change the narrative one bit for precious metals, and the knowledgeable investor would understand that.
Following on to that is the other aspect of it regarding cryptocurrency, particularly Bitcoin, and that is whether, in fact, there has been a shift by central banks around the world, not just accumulating gold and then silver, as we were told over the past couple of months, but also cryptocurrencies. There was an article that came out in Forbes magazine, why central banks might consider Bitcoin as a reserve asset, talking about some countries, including El Salvador and others, that have announced that they're adding that as a strategic asset. Any any thoughts from the conversations that you've had with people about central bank buying of cryptocurrencies as an alternate strategic asset?
No, I mean, I don't think by and large, most of the central banks don't own cryptocurrencies. And sure, El Salvador, well, it turned out to be a hell of a move for them so far. Their balance sheet has gotten a whole lot better. You have President Trump talking about a strategic Bitcoin account. You have Senator Loomis from Wyoming talking about funding said strategic account by revaluing the gold held by the Treasury or held by the Fed on behalf of the Treasury. So no, look, this is a move that has been. I think there's a lot of money on the sidelines. You have a lot of money that is now very bullish on the fact that Trump is the cryptocurrency president. Evidently, he if he is true to his word, he will be very bullish for cryptocurrencies. I don't believe we've seen central banks move in that direction yet, and all I can tell you is that I would ride that out. If you own Bitcoin, I would say it's probably a good place to be right now. If Trump has his way, you will see cryptocurrencies move much higher. But look, the United States does not need to be the cryptocurrency capital of the world, as he's talking about. But I do think, in general, that I would ride this out. If I were in Bitcoin, I would ride it out. It'll probably go much higher, uh, just based upon all of the money that's been sitting on the sidelines. Look, you had almost $8 trillion in money markets, all the money in treasuries. That money has been looking for a place to go, waiting for the election, waiting to see how it all plays out. And I think you will see a nice run in cryptocurrencies. Still, if it were me, I'm uncomfortable holding large portions of my assets in things like cryptocurrencies. And if I were going to play devil's advocate to that question, I would say it's interesting that we see so much rhetoric about Bitcoin, and very little about gold and silver, yet it's the central banks that have been buying hand over fist precious metals and not Bitcoin. Now, the contrarian in me gets nervous when I hear that. The Peter Schiff in me gets nervous when I hear that. But I am of the mindset that the two camps, it's stupid for us to be adversarial. We get much further in life when and I heard, your son said something to me once, and I've used it a lot. He said, if we don't listen to other people, Elijah said to me, we never grow. And he's right. We learn more and more about less and less till we know everything about nothing. So rather than be adversarial with the cryptocurrency community, I see their point of view, and I see the fact why they're bullish. It doesn't mean that I'm convinced that this is a sea change across the globe, but what it is, it's an awful lot of money that all of a sudden believes, right, wrong, or indifferent, that President Trump will be very friendly to cryptocurrencies. But I do not, in any shape or form, believe that central banks have chosen to move to things like cryptocurrency over their traditional holdings like gold and silver.
I want to zero in on one thing that you mentioned in there, and that was Trump advisors who are talking about gold or crypto as backings for things like some new Treasury securities. Judy Shelton's proposal, and this was a question from a viewer. The question from the viewer is, Mark from Florida says, is Andy familiar with Judy Shelton's proposal for Treasury trust bonds? And if so, his
Yes.
thoughts. I'll just read that paragraph out of this article from the Mises Institute. It says her proposal calls for a new issuance of Treasury zero coupon securities dubbed Treasury trust bonds, offering lower interest rates than conventional treasuries, thus reducing current deficits, but with the distinguishing feature that they can be redeemed at maturity either at their face value in dollars or at a pre-specified equivalent in gold at the buyer's discretion. What do we know about Judy Shelton's Treasury trust bonds proposal? Whether you think it has legs and whether you think it will make a difference in the retail Americans, at least, or perhaps even internationally, bond holders' appetite for U.S. Treasuries.
Yeah, like I said, I think treasuries of any duration, like 10 years or longer, are uninvestable right now. Judy Shelton spoke to me some of the most logical things, words I've ever heard come out of a politician's mouth, at least in a very long time. She's right. Who the hell wants to hold our treasuries when they can be weaponized, they can be inflated, they can be defaulted upon? It's a fool's errand. And she's right. It's logical. It not only addresses the issue of inflation, because think of what $10,000 bought you 30 years ago versus what it buys you today. And I think that she's right. This is how you inspire confidence. If you have a much lower coupon rate, a much lower yielding bond, but the ability to possess it or redeem it in gold at the end, I think that is a genius move, actually. And let's first see if she gets nominated to one of the governor boards, if she gets nominated to the board of governors of the Fed. She won't take over for Powell, at least not initially when he takes office, because he has another 2 years left, and he's already told us he won't step down if asked, which I found to be kind of interesting. But I could see her certainly being nominated to one of the Federal Reserve Board positions, and that would be a good start. If that be the case, yes, I think it makes tremendous sense to offer treasuries to instill confidence in the treasury market and to instill demand. That has, in my mind, I think you have much of the world thinking, why the heck would we ever want to hold those treasuries ever again? I think this is a step in the right direction. So yeah, I am familiar with it. Judy Shelton is actually she's a gold bug at heart. She is a gold standard advocate. And she says something very interesting. She says, for all of those people who think you can't go back to a gold standard, now I'm not saying we're doing this, probably not. But she said, look, for 180 years, we had no inflation and the highest level of prosperity the world has ever seen. So, yes, I do think in order to inspire confidence in a system that has lost confidence and has lost trust, that it is a very, very smart deal. And again, I will just say again, it's less about de-dollarization. Sure, that matters, right? It matters if much of the world is trading in local currencies and settling outside the dollar. But it is more important when we talk about the savings of excess reserves, which have traditionally gone into treasuries because they're so liquid, because they're perceived as so safe. That has allowed us, that has financed our lifestyle. And if we have a reluctance of countries to hold our treasuries, we have a problem. This leads to monetization of the debt. That's Weimar Republic Germany. That's hyperinflation. If the Fed creates money to buy the Treasury's debt, that's a vicious cycle that only gets worse and worse and worse and worse, and leads to a system blowing up. First going through massive, massive hyperinflation, interest rates going to the moon, ultimately, and the whole system blowing up. Now, we may be a long way away from that. Maybe not. Maybe. But what I am saying is that by her inspiring confidence with a gold-backed treasury, it is certainly music to my ears in terms of logic coming out of the Fed, or potentially the Fed coming out of Washington. It's someone speaking sanely for once, and whether or not it happens, I guess we'll see. But yeah, I think it would be a great step to reinstill confidence in this country and in our treasury market.
This next one is one I have not heard before. It's an interesting one asked by Forbidden Planet. And you did mention earlier about the COMEX and LBMA under pressure as far as how much metal they have on hand, and the concentrated short positions specifically of the bullion banks that we've discussed. And you and I have discussed that about data that Ed Steer has shared from the Commitment of Traders report, et
Yeah.
cetera, documenting that. This one says, Andy, do you see the COMEX going to the public to buy silver to fulfill contracts that they don't have the silver for?
Yes, actually I do, but not really the public. I could see them going to the holders of eligible silver. You know, we have 9 Brinks facilities throughout North America. One of them, JFK, New York, is a COMEX facility. Delaware Depository, where many people hold their IRAs, is a COMEX depository. A CNT in Bridgewater, Connecticut, that some of our IRA holders have their metal, in Bridgewater, Massachusetts, rather, have their metal held. That's a COMEX depository. They're, those the metal held in those accounts is what's called eligible. It's not for sale. For sale goes to registered. Eligible means it's in the COMEX ecosystem and it is eligible to be moved to registered. There's a lot more eligible metal than there is registered. And whether it be the COMEX or by proxy, someone like Elon Musk who says, listen, we need silver. We need it to very badly to continue to make batteries for our Teslas or whatever it may be, Sony or Samsung. And we will pay a $23 premium, just throwing that number out there, to anyone who wants to sell us their 1,000-ounce bars. Now, as far as the COMEX actually asking eligible, I don't see that happening as much. I guess it's possible. But I do see more along the lines of large traders, large participants that utilize the COMEX, making that offer to holders of eligible metal and kind of incentivizing them, if you will, to consider moving that to a registered account and to have it delivered to a group like Tesla or Samsung or Sony or whoever it may be that wants to take possession of it. So yeah, I think it is something that is not outside the realm of possibility.
This one is a little different. It's for your role as the CEO of a bullion company who recently has been having a number of sellbacks or what we call buybacks from retail investors who perhaps bought there a long time ago when the spot price was much lower on gold and silver. And now we've been facing many of those people who are either wanting to do swaps into U.S. Minted coins, as you were discussing earlier, or straight out cash outs for one reason or another. The question is, Andy, have you ever had people to try to sell Chinese fakes to you?
Oh, in 34, almost 35 years, I've seen two fake coins. I saw fake Morgan silver dollar a long time ago, and I saw a fake numismatic gold coin that was actually gold. I think that they just made it look like it was numismatic. But I think that those types of fakes are going to trade on platforms that will be, uh, well, there's a bartender at the country club I live at, and he and I talk about precious metals every time I see him, and he buys and sells on a Facebook chat room, basically. And I say, well, why are you doing that? Well, I've had good luck, he says, and there's no fee like there is on eBay. That's where you would see it. Craigslist, eBay, maybe places. Any reputable dealer, you would be stupid to try and sell and pawn that off to a reputable dealer because they have the sophisticated machinery to detect fakes. But if you go to places like pawn shops, like flea markets, like Craigslist, like Facebook, it's buyer beware. And so it doesn't surprise me that you would see them. But no, I think that those people, criminals many of them are very bright. They're just their intelligence is misplaced. And I think they know better than to try and waste their ammunition on a reputable metals company who would in 10 seconds detect it. Rather, it would be much easier to sell it on a chat room on Facebook or a Craigslist or a pawn shop and try and get away with it with a less sophisticated audience.
I wanted to piggyback off of that answer and add a couple myself. On one of the buybacks that I facilitated for a customer client, some of the metals that they had sent in, they hadn't realized when they had purchased them that they were actually just commemorative coins. They were plated. It even said on the coins, it said "In Clad we trust" rather than "In God we trust," and we had to pull those out of the pool of metals that they had sent into us. So some people actually just buy something that's was is it's supposedly clear that it's not authentic, but they don't realize that because they're new to it. And so that's one risk. Another one that's more insidious, I believe, and we've talked about it several times before, but it's worth repeating, is a clients after client, week after week, inform me of the exorbitant prices that they have overpaid for bullion that they've purchased through different types of dealers in the past who prey on people's ignorance and offer them what they consider to be collectible or high grade or rare short mintage years or whatever. And the prices are double to three times what the normal bullion prices are, especially like in pre-33 American gold, etc. So either any comments from you on either of those things that are supposedly just complete uh, knockoffs or replicas or something. They're not even, but they can be mistaken by people who are novice buyers versus, and I think you covered that in where you shop will determine whether you get exposed to that sort of thing.
Oh,
But
it's a good question, Dunnigan. It really is. And the companies that are selling pre-33 numismatics at stupid prices, at least they're selling real coins. Um, and and it's a backhanded compliment when I say at least. But I'll say it this way, and I've told this story recently. I have a friend who I've become very fond of, and I play golf with a bunch. And he says to me, I worked for Stratton Oakmont in New York many years ago, and that's the Wolf of Wall Street, Jordan Belfort. And I said, my goodness gracious, did you get in trouble? No, he said, I left when I realized that it was becoming scandalous. I left right away. He said, but it's interesting. Many of the guys that I knew there all went and started their own shop and did the exact same thing Jordan was doing, and they're all in jail or were in jail and are now out. But the reason I tell you that is because I've noticed a very interesting phenomenon. And I have tried to take the higher ground. I wish I didn't feel obligated to do so because really my loyalty is to the public, not to these criminal companies. And they are criminal. I mean, I guess it's not fair to say that because it's, in essence, no law was actually broken, but they're criminal in my mind. They're criminal in the respect that they're destroying people's lives, but the commonality between the story that my friend Eric told me about all of these guys starting their own shops doing the exact same thing, selling the exact same securities, is that all of these companies sell the same thing. And in every single case, as strange as it is, it's quarter ounce gold coins from a mint that you and I would know, whether it be the Canadian mint or the Australian mint. Typically, it's Australia for some reason. But there are coins that you and I wouldn't know. There are coins like the spotted chicken. I mean, I'm joking with that. They're coins I've never heard of, a mint I've heard of. And the story is, yeah, man, these are huge premium. These are huge potential coins. And yes, you'll pay more money for them, but let me tell you how much money you're going to make. You got to hold them for 3 years. That's what they all tell them. Hold them 2 to 3 years, you'll make a fortune. They sell quarter ounce gold coins at between $850 and $11 or $1200, and they sell either 1.5, or 2 ounce silver coins between 60 and 150 bucks. And in every single case, no matter which company it is, there's 4 or 5 or 6 of them, it's the same thing. It's the same model. And as far as I'm concerned, each and every one of them is criminal. And you never see any of these IRA companies. And in almost every instance, it's companies focusing on IRAs. Where are their CEOs like me standing up and talking to the public? These guys are chicken, you know what, chicken blank. And they're instead, these people must not have parents or grandparents, because I don't know how you look your mom and dad in the face, or your grandparents, if they're still around. Consider yourself lucky, knowing that you're destroying people's lives of that age category who've worked their whole lives to put money away in an IRA and are following the advice of trying to protect themselves, and then get hoodwinked by fancy spokespeople that tell them to buy these coins at a massive profit. And when we look at those coins and say, look, there's nobody buying that stuff, you're going to get 99% of melt value on that, but they paid in essence $200, $300, $400 over spot for them per ounce. It's one of the most disturbing, gross things I've ever seen in 35 years in this industry, and it's pervasive. And I will tell people, call us, reach out to us. We have a method of making you whole, and we will tell you what to say to these companies. And it's worked pretty well so far. But if you have been, and don't feel bad or embarrassed if you have, these companies are very good at being criminal. They're very good at lying. They're very good at deceiving. And I would argue that the people that they pay copious amounts of money to promote them have no idea, none, what these companies are doing. None. And that's part of the plan, is that you get a fancy spokesperson to talk of the virtue of the company. And when the coins are sold, they're sold at a level that it takes a year or two for these people even to figure out that they've been hoodwinked. And the people that are getting paid the promotional fee have no idea that they are sending people, in essence, to the slaughterhouse in terms of value of their portfolio. In an IRA, which you could argue is the most important thing for these people, the largest chunk of money they have outside maybe their home, something that they, represents their life's effort. It's awful. But yes, look, keep it simple, stupid. Remember that KISS?
Mm-hmm.
American Eagle, of Maple Leafs, bars, Krugerrands. You buy coins from the major six mints and you buy their normal thing that these companies try and call them as, I don't even know the phrase that they use, but they try and say that buying just normal gold eagles is bad. You should buy proof eagles, or you buy these special quarter ounce coins. And the things I've seen done again are absolutely horrific. So if anyone has been affected by that, reach out to us. We'll tell you what to do.
Yeah, I just had a client in the last month who had been sold cases and cases and cases of proof eagles. I mean, many, many, many hundreds of boxed with velvet boxes and certificates of proof eagles. And he decided this is ridiculous, and he realized he was oversold something. As you said, you don't need to make your whole ice cream sundae all the cherries. And he swapped those into us for American silver eagles and ended up with a lot
I
more ounces
remember
of
that.
silver. Yeah.
I remember that was just a couple of weeks ago. I
Yep.
remember that. In fact, I was talking to operations about that because I had someone like that too, and they said, "Is Dunnigan doing this for your client?" And I said, "No, it must be another client." That's how pervasive that it is. And as a side, I love the proof silver eagles. I own, I don't know, a couple dozen anyway, 20, 30, 40, I don't know. And I've given them as gifts to my children's friends when they had birthday parties. Instead of giving them a nonsense toy that gets thrown under the couch after they use it, that they never use again, I gave these kids proof eagles every year. And if I had $1 for every time they've come up to me as they've now become young adults saying, "Andy, I love those silver dollars and I'll never sell them," it warms my heart. So I love them, but it's not the vanilla ice cream in your financial sundae. It's not. It's the sprinkles. It's the hot fudge. It's something you do because you like it, and you understand that you're paying a big premium. That's fine, but trying to build a position to protect you from what is coming should be very heavy in bullion and very liquid and very recognized. Low premiums. The reason is simply this, and you know this by now, Dunnigan, is that this industry is a very low margin industry. We are on par with the grocery stores. Well, if you listen to Kamala Harris, that means we're price gouging, if that's the case. But we're not. We are on par with the grocery stores, very, very, very low margin. So either you do a huge amount of business, as we have been very fortunate to do over the last several years, and you're a big part of that, or you make a story out of things that you can create huge premiums on, and do so at the expense of looking yourself in the mirror before you go to bed at night. And if you're one of those people who has the propensity to be able to do that, well, more power to you. I don't, and we would never go down that road. it's a really awful thing, but I'm glad that you were able to help this person, and hopefully a discussion like this, makes its way to someone who has been taken advantage of, and we are able to help rectify that gross situation.
Yeah, and your lesson on this is well taken. If so, people prevention again is 90% better than having to try to dig yourself out of it once you've already been oversold. Some of the signs and signals that we tell people to watch out for are glamorous TV ads with celebrity spokespersons. Usually, it's either a retired sports star, Hollywood star, uh, retired politician, or a member of the mint or something like that. Those are typical types of celebrity spokespersons. But what's really irked me recently is I see whom I would otherwise consider to be legitimate independent journalists who are now coming in as affiliates for some of these companies, and I'm concerned that they don't even probably know how shady the routine practice of intentionally upselling and overselling people some bullion that's way more expensive than what they need to protect their finances is
Well,
dragging is making it's putting a bigger black eye on the industry than it and on a lot of these journalists than it should.
but let me tell you that about that. I every time I come across it, I tell them, I say, you are representing a company that's screwing the public, and you're going to lose your reputation. And most of them, to their credit, have pivoted. Others haven't, and that should be all you need to know about those journalists. And I have a very big problem with outing people on the platform that we have. And in a perfect world, I would be able to call all these people out. I don't do that. I try and give you enough information to infer who they are. But there are those companies that are enticed because those journalists, look, you understand the bullion market. And again, many of these guys and gals do not. And they're told, look, we'll give you 10% of the order sale. So if it's $1 million sale, you're going to get 10% or whatever the number is. Well, heck, that's 5 times more than we would make or more on a transaction altogether. So how the heck are they paying 10%? What does that mean they're making? These companies are making 30, 40, 50, 60, 70%. And they entice these YouTubers or journalists who don't know better with big paychecks. And one in particular, I've had many conversations about, and he hasn't done anything about it. So I don't do his show anymore. As a result of it, I find it to be very troubling. But in a world where people are struggling through the higher cost of living to make ends meet, I think some people are falling prey to that enticement. They are selling their soul, if you will, and at the same time they're ruining, potentially destroying their career and their reputation as a YouTuber or a blogger or a journalist. And it will happen. I guarantee you, it will happen. Because what happens is it's usually at least a year before these people get it, and they start seeing the price that comes on the statement, the IRA statement, so
Yep,
far deviated from what they paid.
that's
And
right.
then they'll call and they'll say, no, 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 you just need to hold it for 3 years,
That's right.
and then this is what you're going to get. So they're buying themselves 3 years, at the end of which time, the rubber meets the road. But it's really awful. And this is the pitfall of an unregulated industry. There are bad people that are preying on the public. And the craziest part about it all, they say, some of them will say things like, "Oh, you'll get $10,000 free of gold and silver."
Right.
Really? That's interesting, because I would have to do an order of, I don't know how many millions of dollars to be able to offer that, millions and millions and millions to offer that to someone. Yeah, here's $10,000 of free metal. And then when you look at the metal that they give them, that $10,000 fugazi lie, they're giving it to them at the stupid prices that they sell it to them for. So in essence, they're giving them a fraction of what they say. But the point of
Yeah.
it is that they're making so much money, And these companies have so much money. They're making more money in a couple of years than Miles Franklin makes in a decade because they're charging 20, 30 times or more what we would charge. In some instances, lowball 15 times as much. And that's the truth of it. And it's a gross thing. If you're talking to these people with high price spokesmen, just give us a call and we will be straight with you. And then you can go online and compare with companies like JM Bullion, with Amex, with Money Metals, companies that are legit, that are reputable, that are good, and do not harm the public. That's how you know you've been treated fair. The funny thing is that when you go and try and find the coins that most of these companies are selling on any of these websites, well, geez, you can't find it. And they'll tell you, yes, it's a very limited edition coin that has massive upside potential. That's another way of saying you're getting screwed.
Any update from you on, and this has to be brief because we've only got a couple minutes, any update from you on the banking situation or domestic bondholders? You mentioned before you'd have to be crazy to be trying to buy U.S. bonds right now, and that's why a lot of foreigners aren't. But a lot of people's banks themselves or insurance companies are, or they're stuck with toxic bond portfolios that are hangovers from when that was a good idea, over the past couple of decades. Any thoughts for people who are considering where to park their cash that they need a yield on right now?
Hey, you and I were talking offline about insurance companies. We had some information that insurance companies are having a hard time meeting their obligations. Why? Because they're loaded in 90% treasuries. And to me, when you see there are three things that make the banking situation very ominous to me. And I say this in the light that if there really is a deep state that is out to get President Trump, I think the idea would be to pull the rug on him and blow the system up, and he would be blamed for it, and his policies would be blamed for it. You look at the BTFP, the Bank Term Funding Program, it is expired. It is now at zero. This was the pool of liquidity that was given to all of the banks in April and March and April of last year when Silicon and Signature began to fail. You look at the reverse repo market, which was a pool of liquidity over the entire pandemic. It is now virtually at zero. You see a draining of the liquidity out of the system that is very ominous. And then you see the Bank of Lindsay, Oklahoma fail and lose half of its uninsured deposits. And the thing that's ominous about that, I did an interview today with Vince Lancy, who I consider to be as bright as they come and well-read. He's one of my go-to sources every day to get information on the world. And he knew the bank failed, kinda. He's like, no, I really haven't heard much about that. And that to me is an indictment of not only the media, but also a black swan or a red flag, if you will, that it's like a trial balloon. In other words, the Bank of Lindsay, Oklahoma fails. And in contrast to Silicon Valley and Signature, where, I don't know, a few $1 billion in uninsured assets were covered, Oprah and the tech startups. But this little tiny itty bitty bank in podunk flyover country, Oklahoma, has only 7 million in uninsured deposits and half are gone. Now, if you Google Bank of Lindsay, Oklahoma, I don't even think it pops up. You have to Google failure of Lindsay Bank of Lindsay, Oklahoma, and you'll see a snippet from the local Fox News channel, who has a website there that talks about it. You'll see it on the FDIC website. But the lack of coverage of this is tremendously disturbing to me. It's as if they want it to be out there, but they don't want to cover it because it's their trial balloon. So I think that anyone who holds any amount of money in especially a regional bank above the FDIC limit is out of their mind. And I think that this was the shot across the bow, if you will, the Bank of Lindsay. And at the same time, you have the BTFP, and you have even the discount window is virtually at zero. So all of these forms of liquidity that the banks would typically go to have dried up. Some of them aren't even available anymore. And the over leverage of these banks, I think, will be a massive problem as the 10-year continues to rise and as these commercial real estate leases and loans need to be reset. We have not even begun to see the end of the bank failures. And yeah, I think the fact that it isn't front page everywhere, from 60 Minutes to Fox to Bloomberg to CNN to every newspaper, to me is an ominous contrarian indicator. Why are they so quiet about it? Well, we told you it's on the website. It's here. Sorry you didn't notice it, but that is the law. So sorry, half of your money is gone. And I think that's something that I think people should think hard about, because these people often do things that way. They show you just enough, they give you just enough to where they can, they can claim culpability. They can claim, no, we didn't do this. We told everyone that this was a problem. This was a possibility. The Dodd-Frank Act says it. And the Bank of Lindsay, we talked about it on our website, but yet no media coverage. I find that to be scary. So while I do not know anything done again, the lack of coverage of that bank failure to me is a
Hmm.
very, very red flag, a big
Yep,
red flag.
it's been the similar when I've spoken with people about that, they were unaware of it. I want to just before we wrap, I want to hit the specials of the week. And you've got some low premium opportunities for people here. I'm going to get those up real quick. The first one is the British Royal Mint, uh, the 1 ounce gold British Lion and Eagle series. And those are priced at only $99 over spot, which is cheaper than the coins you can get from the US Mint and on par with other gold coins you can get from any of the world mints that you would mention, the six major mints of the world. Any comments from you on that one before we go to the
Yeah, I
next
want
one?
to address that. I'm glad you brought that up, because this is one of the coins, something like one of the coins that these companies would sell, but they would cite the fact that it is a limited edition coin, but yet we're selling it at a fair bullion price. These companies would sell them at a much higher price. So yes, it's a limited edition coin from the mint in Great Britain, the Royal Mint, and it's sold at a price that is less than American Eagles, on par with the Canadian Maple Leaf. It's a great coin. Um, so yeah, I have no problem with it. I think it's a good coin to own. I also want to say that there's crossover in some of our following, and I have made an offer to one of the companies that I am on, and I know you've had some people contact you. Some of the YouTube
Yeah.
channels I'm on, or one of them in particular, $1.89 over spot on pre-65 junk silver. I would like to extend that to everyone for the remainder of the week. I think that's the best buy period in silver, and in my mind, it's not even close. So on top of the specials you see there, $1.89 over on constitutional silver. It's really hard to get dimes right now, so it's primarily quarters. It's 10 or 15 cents more for $0.50, but to me, that's the best buy in silver. But I do like those gold coins, and they're at a very fair price.
And I also wanted to hit the still the backdated 1 ounce silver Austrian Philharmonic. Some people prefer not to have British royalty on their coins, and that's frankly rare. And because many of the countries of the world, Canada, Australia, and Britain do put them on their coins. So the Austrian Philharmonic is one that doesn't have that. Anyway, and those that we have at 309 over spot backdated. Any comments from you on those?
No, I mean they're great. They have the giant organ that's in the Philharmonic Orchestra on one side, and then some of the stringed instruments on the other side. It's one of the only coins I've ever seen that has smooth edges on the side. They're not ridged like every other coin.
Hmm.
They're awesome. They're probably the most common silver coin in all of Europe. They are a great choice, and especially at those prices. Look, there's six major mints: U.S., Canada, Austria, Australia, South Africa, and the U.K. Anything from those mints, if you're buying their primary issue coin, that's what you want to own. So, if the American Eagle is Coca-Cola and the Philharmonic is Dr. Pepper, well, they both drink the same. They're both an ounce of silver in the end. You may not like Dr. Pepper as much as you do Coca-Cola, but in the end, they're the same. Now, the rationale for buying them over the American Eagle is that they're, I don't know, a couple, $2, $3 cheaper than the Eagle. So all else being equal, many of the states that have passed legal tender laws say any sovereign mint. Some say only U.S., like Oklahoma and Texas, I believe, but many of them say any sovereign mint coin. So if you're looking for a really good value on a 1 ounce silver sovereign mint coin, that's it.
Well, Andy, we're grateful for always for your presence here with us, and even tonight you jumped even higher than usual because you were tied up away from home, unable to get back to your studio, and yet you still made time for us. So drive safe, be well. We love and appreciate your visits here with us and the education that we get from you for so generously every week, and it really is a family here of supporting each other and trying to reach out as many people as we can to help provide them with the information they're not gonna get from the mainstream financial news or any other news, and to help people to find their way to safety in times that are bound to be very different from the last 40 years going ahead. And the rules have changed, and you're helping us figure out what the new rules are to help us keep ourselves, our families, our children, our grandchildren, and our loved ones safe along the way financially and have a future. Just thank you from all of us to you for being here with us again on Liberty and Finance.
You're very kind, Dunnigan, and it's something that is my honor and privilege to be here with you. It's Mutual Admiration Club, and um, I do my best to honor my word. Sometimes you can't, and today it was unforeseen, the delay that happened. I was supposed to be home 2 hours ago with my meeting with Robert, but I just pulled into my driveway, made it safe and sound, and you made the hour drive that much shorter. It feels like I haven't even been driving at all, so I get into my own head. But it is it's my privilege, and I enjoy these conversations, and I thank you for the kind words. The feelings are mutual, and to everyone else out there, just know that all of this comes from the right place. It's something I believe in to my soul, and you'll never find someone um, more than Dunnigan and myself who believe what we say and do what we say more. And so for that, I thank you, and I look forward to picking up where we left off real soon.
All right. Very well. Thank you for being here. And thank you everyone who joined in the live chat. And make sure that you share this video widely. We got to get the word out, help as many people as we can. And Andy, thanks again. And we're going to wrap tonight. And thank you everyone for being here. Take care, all.
Bye bye, everybody.